One of the companies that's really struggled on the market recently is Lululemon. And this is really interesting because a lot of growth stocks have been doing extremely well in 2024, but that hasn't really translated to a lot of the consumer goods companies like Lululemon. Shares were down as much as 40%, a little over 40% a couple of weeks ago, currently down 38% from their all-time high. So the question is this a value? Is there something broken about Lululemon stock and the company? That's what I want to dig into today. And the answer may actually be simpler than it seems. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First of all, let's look at a chart of Lululemon's revenue and growth rate. And I think this explains a lot of what's going on. You can see that Lululemon in 2021, even early 2022, had an extremely high growth rate in the 40% range. That has steadily come down over time. Now, these are trailing 12-month numbers. So it actually looks a little bit worse if you're looking at just quarterly numbers. Last quarter, for example, which is the quarter ended in April 2024, revenue growth was only 10.4%. So is something broken about Lululemon? Are people just not liking their products? Well, that's not really the case. The company is still growing. I think what explains a lot of this is actually the company's store count. And I'm going to break this down into two pieces because there's the physical Lululemon stores and then there's the online experience, the e-commerce sales that they're going to have through their website and other digital platforms. Now, the first thing I'm going to show here is the three segments that Lululemon reports: company operated store revenue, direct to consumer, so that's going to be basically e-commerce sales, and other channel revenue. This goes back to November 2020. You can see that very solid compound annual growth rate for each of these. And even in the most recent quarter, these are all trailing 12-month numbers again, the numbers continue to go up. What has changed a little bit is the rate of growth. And this has really been across the board. But you can see if you go back to during the middle of the pandemic, a lot of the purchases were happening online. That shifted to a higher percentage of sales being in store over the last couple of years. That makes sense because the way people are shopping is changing as stores open, as more people are comfortable going out again. I think this is probably a more normal state today where we're at with the percentage of sales online and in store. But that means that to grow store sales, you're going to have to do one of two things. You're going to have to grow the number of stores that you have or grow the sales per store. And that's where this chart really makes a big difference in the company's growth rate. You can see that the number of new stores has leveled off just over the last couple of quarters. Now, there's going to be volatility quarter to quarter on how many stores are opening up. But if you dig a little bit deeper into where stores are opening, this is where I think it tells the broader story about Lululemon and their growth in physical retail. United States stores since 2020 have gone from 305 to 369. Mainland China stores have gone from 29 to 127, so nearly 5x the number of stores in mainland China. You see a similar story in Hong Kong, in South Korea. So a lot of Lululemon's growth is happening in Asia. And this goes for a lot of different brands around the world. A lot of the brands that I cover on this channel are finding that these more mature markets like the US, like Europe, is going to be slow and steady growth. But once you reach some sort of level of saturation, you're going to turn to a place like China or Southeast Asia to look for your growth. And that's exactly where Lululemon has found it over the last few years. But that growth rate of 40-50% isn't going to happen forever. And so what we're seeing is that growth is starting to slow down. It's fine that a company like Lululemon is growing in double digits, low double digits, maybe the future they grow high single digits, but this shouldn't be alarming. But the reason that the stock is reacting so harshly is what investors were paying for it not too long ago. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This chart really tells the story of Lululemon and why the stock is down so much. It's simply the multiple that investors are willing to pay for the stock. And you can see that this has been all over the map over the last couple of years. So I included in red the price to sales multiple and in blue the price to earnings multiple. The reason to include both of those things is earnings are going to be a little bit volatile. Maybe you have a good quarter from a margin perspective, or you cut your operating expenses. Maybe the next quarter, some of those things reverse. So earnings can be volatile, but typically revenue is not going to be nearly as volatile. So that's the reason that I included both of these. But you can see that price to sales has gone from basically 10x in 2021 to now trading for 4.1 times sales. Price to earnings multiple has gone from over 60 as recently as the end of 2023 to now 25.5. So what's happened with the stock is just simply what we call multiple compression. The price to sales multiple, the price to earnings multiple that investors are willing to pay has simply gone down. And that's largely based on the expectations for future growth in both revenue and earnings. So if a company is expecting to grow revenue at 30% per year, investors are going to put a higher multiple than a company that's expecting to grow revenue at 10% per year. So what it seems to be is that investors are going, maybe Lululemon isn't going to grow at 25% for the next 5 years. Maybe they're going to grow at 10%. If we look at the company's guidance, that's exactly what we see. This is not a dying business or a struggling business. It's just now being reassessed at what we should pay for it by investors. You can see here that last quarter, comparable sales were up 6% or 7% on a constant currency basis. That's really solid for same-store sales growth for a retailer. And then if you go down to guidance, outlook for 2024, expecting 9% to 10% revenue growth. That's really solid, again, for a company the size of Lululemon. That's for next quarter and for the full year. So for all of 2024, expecting now revenue growth of 11 to 12%. 10 to 11% if you exclude an extra week in 2024. So again, all really solid numbers. I don't see anything that's fundamentally broken about Lululemon as a company. What has simply happened with the stock is it's been re-rated, as we sometimes call it, or reassessed what sort of multiple we should be paying. Now, I think Lululemon is much more attractive today than it was just a few months ago, but that doesn't mean it's a no-brainer buy. And I think I'm going to put these things in two different buckets. Is Lululemon attractively priced? Yes, I think it's relatively attractively priced compared to a lot of the other companies in this market. But when I say a no-brainer, I mean a company that's trading for, let's say, 10, 15 times earnings and is growing at double digits. Lululemon is trading more like 25 times earnings and it's barely growing at double digits. So yes, it can live up to that multiple, but it does not have a lot of asymmetric potential at that price point. So a company that I'm much more interested in today than I was a little while ago, but I would like to see the stock fall even further, get a little bit more beaten up and underestimated by the market, because I think there are companies that are growing much more quickly than Lululemon, specifically in their space. I'm seeing that more and more as you go out to retail stores. And this is going to be a fundamental challenge for Lululemon. They built such a big business, such a profitable business, that everybody is going to go after it. So not a stock I'm going to be buying yet, but definitely on my watch list, because if it pulls back, could be a really nice entry point. But what do you think about Lululemon stock, especially after the pullback recently? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.